Hi, everybody. Sorry I couldn't be there in person, but I just wanted to do some sharing session with you. I'm presenting about Boost Capital and our project with Strive. So our project was to show that financial education has the potential to de-risk and expand access to small business credit. We were testing the viability of a virtuous cycle in which businesses that were performing well in financial training are rewarded with better access to financial services. And the reason that Boost is uniquely positioned to do this is because we're already embedded with banks as a chat-based onboarding system where we process loan and savings applications. So we could connect the customers who were consuming financial education with us to the financial service providers that we work with, and then tie it together with loan performance data in a way that companies that only do financial education could not do. In order to do this for the project, we revamped our chat-based financial literacy that we had been doing sort of as a side project. We did that revamp based on client behavior analysis, and we created a scoring framework and a data system to support it. Then the data system was needed in order to be able to correlate the financial literacy consumption with the client loan performance. So what did we build? Basically, we took a lot of the lessons that we had learned from our digital onboarding of loan and savings customers, and we used that to create free financial education. The lessons are very tailored so the customers can choose their content and their path. They're interactive, so it's not a static experience. It's one in which there's a lot of back and forth between the student and the content, and it's accessible. So it's available 24/7. It doesn't require an app download, and that's quite crucial. We work in Southeast Asia, where having to download an app is actually a big barrier to entry. So we structure out of chat and existing social media platforms instead. We also are of the opinion that most people do not consume financial education without the promise of a benefit. So that was part of this project. Because we operate in both financial education and financial services, we're able to connect the two. So students could share their performance with our banking partners so that they would get better access to financial service, and the bank would get more financially savvy responsible customers. We also integrated the financial education so that the clients who were declined for a financial service could ameliorate their situations and reapply. And then we also added financial education post-financial service as a way of building an ongoing relationship with the customers. So this is sort of our content menu. You can see there was a big business-focused content as part of the Strive project. But basically, what did we show out of this project? We showed that customers who consume digital financial education content are better financial service customers. And this is a huge deal because that was our primary goal. And also, it's something that we all assume, but there's very little data behind it to actually make banks change. So you can see in this chart a comparison between all digital loan applicants on the left and the digital loan applicants who consume financial education. You can see they tend to be more responsible borrowers. We also significantly expanded how we interweave that financial education throughout the entire financial service onboarding cycle. So it went beyond just lead generation. That's where we kind of started with it. And we started deploying it for funnel improvement, like recovering applicants who would have been excluded from the financial service, and customer retention in post-loan disbursement. So it basically was saying that we can make financial education far more useful to financial service providers, and thus more likely to be sustainable and impactful for the FSPs. It also is having a positive effect on lending behavior. Our bank partners are starting to factor financial education consumption into their lending behavior. So it means that we're in the first steps of starting to change some underwriting to factor in financial education consumption as an indicator of lower risk, and to loosen or adjust the loan product criteria for financial education consumers. So what were key insights from the project? People love chatting. It sounds biased from a company that works mainly in chat, but like we really did start the project with interviews of people who both consume digital financial education and those who do not. And we also offered content through different channels. So we, in addition to chat, we tried TikTok, Instagram, Facebook, like Facebook live sessions. And we found that by far the most popular was chat. It's interactive, it can be tailored, it can have the customer directed branching experiences. We also talked to app-based onboarders who told us that like for every 100 chat conversations a customer starts with them, only one person will actually download their app. So just sitting in chat rather than requiring an app download makes a huge difference in terms of your reach. So overall, we were very convinced of the merit of using chat to engage customers over other platforms. Another insight, people do not like long form content, especially long videos. On average, a viewer dropped off after 12 seconds. So we kept our videos really short and we interspersed them in a back and forth manner with the chat. Another insight was that financial education consumers continue to return to learn more, even after their initial chat. We've seen customers continuing to engage with the content over months, not just before or after seeking a financial service from one of our partners. So we keep adding content to keep it fresh. Lastly, insight, financial education clients have better repayment histories. So those being rejected for loans by our partners and then choosing to consume financial education had even better histories of past loan repayments than the general digital population. So like even those people who are getting rejected were still better than the norm. And so we actually have been promoting scaled up financial education to the rejected applicants as a way to grow our data pool and to figure out how we could help extend access to finance, because we think it's a very high potential cohort and it's a very highly excluded cohort. Challenges. We knew from the beginning that we were going to have a chicken and egg situation where we couldn't change bank lending until we had the data to show them that it would be a good idea. But I mean, we found it challenging at the start of the project to gather enough data about the creditworthiness of the financial education customers because so few of them were getting approved for loans by our partners. We overcame this by realizing that any applicant that was credit checked by our partners, actually that gave us a ton of data because we would then know their past repayment histories, and that could really expand our data pool, even if the current loan application was rejected. So basically, that helped us a lot in expanding our data pool. In terms of what's next for this project and for Boost, we're in the midst of launching financial education as its own commercially viable product line with contract negotiations in progress for our first client. And what would be my advice? I would say definitely appreciate the Strive community. I think that the community aspect of the experience was surprisingly and exceedingly helpful. And then also appreciate the fact that the program has uniquely, like in my experience of working with development organizations, found a good balance between reporting requirements so that and learning, so that they're not creating too much busy work and they are requiring enough reporting and introspection on a periodic basis to make it useful for the growth of the project and to keep our learning disciplined. So appreciate what you have. Thanks.